Hello everyone, welcome back to the Maverick channel. And in the light of FTX, the exchange has just collapsed. Billions of dollars stolen by an individual called Sam Bankman-Fried, and a couple of his other friends. In light of that, we've seen other cascading effects that are occurring in this industry where some exchanges actually halting withdrawals as well. So users don't have access to their funds because those exchanges they don't have the liquidity to do that. Maybe they were over leveraged, or they had been lent money by the FTX exchange. Now there's a major institutional lender out there that's called Genesis, which is a threat to the current crypto market. So essentially, you've seen the downward effects caused by the collapse of FTX, that major exchange. But there's still this institution which is actually over leveraged as well, because there were massive lenders to massive institutions out there, and they've halted withdrawals to their massive, their clientele, who are normally whales, people that deal in very large sums of money. This could be extremely catastrophic to the crypto market. This exchange is it's a lending institution. It's known as Genesis. Access at a global scale, built for institutions, guys. Now, when you look at these guys' Twitter, Genesis Trading is a global leader in institutional digital asset trading, lending, derivatives, custody, and prime brokerage services. So they do that kind of stuff. Prime brokerage services, lending, custody of digital assets. It means they have to, implement all the methods of protecting user funds in this environment of custodying, keeping assets on behalf of people. But there's a narrative that's coming to light in the cryptocurrency space where people are starting to understand the importance of not your keys, not your coins. In other words, understanding how to operate your own private keys, how to store them in a secure manner, using cold storage, using paper wallets. You can just use a Ledger Nano, for example, a very good device. Now, when you come to these guys' Twitter, when you look at November 11th, they tweeted this out. This is when the whole FTX debacle was starting. As part of our goal in providing transparency around this week's market events, the Genesis derivatives business currently has 175 million locked funds in our FTX trading account. This does not impact our market making activities, guys. So if these guys have this kind of money locked into FTX, and they might have more, maybe they're not being transparent, but this is if that's the amount of money they had, just know it's gone. Unless they have some other backdoor dealings with FTX, or even if which they had those, maybe they're holding the FTT token, which is currently essentially illiquid. Where are you gonna sell it? Who's gonna buy it? Maybe you can trade with people, but you might not get as much money as you would have. So the liquidity isn't very clear. Now, if you look at their recent tweets, which was November of 16th, 2022, we recognize how challenging this past week has been due to the impact of the FTX news. At Genesis, we're entirely focused on doing everything we can to serve our clients and navigate this difficult market environment. Now, of course, if any company is collapsing, they push out these messages as sort of supposed to comfort their clientele, to comfort them, and keep not to put them in a panic mood, not to make them panic, not to make them make any rational moves. But this does not necessarily mean that things are going well. But hopefully things turn out well. But let's get to the point of this. We've hired the best advisors in the industry to explore all possible options. Next week, we will deliver a plan for the lending business. So next week is when the bombshell is expected to land. We're working tirelessly to identify the best solutions for the lending business, including, among other things, sourcing new liquidity. Guys, let me tell you something. Now, there's something I've included in here. They tried to reach out to borrow $1 billion to solve this problem recently, probably a week ago or even this week. They tried to borrow $1 billion, and that plan failed. And if you look into the details of this company, they're indebted to up to about $2 billion, guys. Now, there's this short article that was written about them to sort of, amplify, to showcase the magnitude of what's going on. Now, first of all, this Genesis company started way back in 2013, which means it has that reputability, that reputation, the fact that it's been here for a very long time. It means a lot of parties will trust it. So the way they work, let me just go through this a little bit. For example, Gemini Exchange, which is one of the biggest exchange led by the Winklevoss twins, who are proclaimed to be one of the largest holders of Bitcoin. Now, that exchange actually has this program where they lend funds, customers' funds, to these institutional investors to give them yield. Now, some of these exchanges lend through Genesis so that they don't have to go through all those, basically someone else does it. So why is the downfall of Genesis so bad? Dozens of companies like Gemini use Genesis to help their consumers earn yield. If you're a CeFi, centralized finance platform that offers yield, you probably use Genesis. Using some rough numbers and simplifying the process a bit, here's how it works. For example, the earn interest on crypto with Gemini Earn. You give your crypto to Gemini, the exchange. Gemini gives your crypto to Genesis. Genesis lends your crypto to a fund. The fund borrows from Genesis, guys. Stay with me. For example, X, which you've given to them, plus 2%. Then Genesis gives Gemini X plus 1%, so the other guys take the 1% for themselves. Then Gemini gives you the X%, which is, the profit, the little profit you've attained, you've profited from giving them your assets, to earn that yield for you, and voila, you earn your yield. So here it explains what Gemini Earn is, and which is essentially that some users can opt into that program and give their money out. So Janowitz, who's a Blockworks, one of the analysts, companies that analyze blockchains and what's happening in crypto on a technical level, the news, the technical side of blockchains themselves. So Janowitz from Blockworks notes that Gemini Earn is not the only one that does this, but institutions as well. So family offices and crypto whales. So whales is referred to as obviously people that have a large, massive investment in cryptocurrencies. Some of these people can move markets. Crypto whales utilize the same service. With Genesis halting withdrawals, it means it cannot or does not have the funds to pay out these large investors. Where lenders like Celsius Network, which was one of the other networks that essentially became insolvent, Celsius dealt directly with retail. Genesis deals with the so-called big fish. And just a little note, the Blockworks founder explains that because Genesis deals with such large clients and major players in the crypto space, a collapse would be very bad for the crypto market. They sit at the direct center of capital markets. They custody funds. They help institutions earn yield, and they are the yield product for CeFi, centralized finance platforms. It's not good, it's ads, of course. And then it concludes that, you should learn how to custody your own assets. You should learn the not your keys, not your coins, phrase that's being touted around in cryptocurrencies, which has been said time and time again, over and over again over the past years. You need to learn how to custody your own assets. And I just saw a tweet somewhere that over 80,000 Bitcoin has now flown to Binance. I guess people are just repeating the same mistakes. I know Binance seems like the savior right now, but you really have to be careful, because sometimes if you want to rush for that trade to catch the market, if you're being greedy, you might end up losing everything. So we see all these Bitcoins that are flown off exchanges, but we also see a large chunk of them flowing back to Binance, which is a centralized exchange. So you have to be really careful out there. You don't have to over leverage yourself. And if you're already taking on the risk of investing in cryptocurrencies, these assets that haven't yet properly established themselves in terms of use cases, we haven't yet seen a mainstream use case out of them. You can't add on top of that other risks like, an exchange. If you've traded properly, an exchange that over leveraged and misuses your funds, you've traded properly over the years, and you end up losing your stablecoin position, especially because the stablecoins are stable. You're waiting for the perfect time to get into the markets, and guess what? You lose that as well because of someone else that's holding your funds on your behalf that then misuses them. So guys, watch out for what you learn. Essentially, to conclude this video, what you learn is that even the biggest institutions don't really know what they're doing in this space, and you can actually benefit a lot by doing your own research, looking out there for what companies are developing the best products out there, looking out for what blockchains serve your particular purpose, maybe privacy, maybe Bitcoin, the fact that it's robust and there's traceability of this blockchain since 2009, it's one of the first. Maybe that's your cup of tea. Maybe you want to look out for another blockchain that's focusing on AI and you want to really invest in the team itself. You want to look out for a blockchain that's focusing on Oracle data, on maybe some kind of revolutionizing the DeFi or decentralized finance space. It depends on the use case that you're looking for, your company that you want to maybe somehow entangle cryptocurrencies within a share model, or you want to issue ownership to your clients, issue a portion of your company through cryptocurrencies. I don't know whatever use cases you're looking for, but also you have to pay attention to whatever use case you have. If you're just investing in these cryptocurrencies as someone out there who's just getting into this space, then you have to make sure you learn the core values of this space. You know, security. You want to learn how to custody your own assets. You don't want your experience in the cryptocurrency space to be in the hands of someone else. This is about control of your own real estate, control of your own assets, control of your own financial situation. So you should know and understand how these digital assets move, how these blockchains work. We have to go back to the initial ethos of why crypto started, and through that way, and through maintaining those values, through that's when we'll find the true use case of these digital assets, and that's when we'll find a true use case. Alright guys, I hope you enjoyed something. Go look into these things, educate yourself a little bit more about how to custody your own assets and about how these blockchains work. I'll see you on the next one, guys. Take care. Bye-bye.